Welcome to a new episode where we delve into the world of investments. Today we focus on a topic that's crucial for investors looking for stable income: monthly dividend stocks. Imagine having a paycheck land into your account every month. Now imagine that paycheck coming from your investments. That's the beauty of monthly dividend stocks. They are shares in a company that return a portion of earnings back to shareholders each month. Unlike quarterly or annual dividends, these payouts come in 12 times a year, providing a steady stream of income that can be a boon for investors, especially those in their retirement years. Investing in monthly dividend stocks can be likened to planting a seed. You invest your money, nurture your investment by making informed decisions, and over time, you start reaping the fruits of your labor in the form of monthly dividends. But the benefits don't just stop at receiving a steady income. There's also the potential for capital appreciation. That's right, the value of the stocks you hold can increase over time, and when you decide to sell, you could make a profit. But remember, the world of investments isn't a guaranteed win. It's essential to do thorough research, understand the company you're investing in, and consider the market conditions. Like any other investment, monthly dividend stocks come with their own set of risks. For instance, a company might decide to cut dividends during tough economic times. However, the resilience of monthly dividend stocks often makes them a worthwhile consideration for your investment portfolio. Now, you might be wondering, which companies offer monthly dividends? Well, there are many out there, each with its own unique strengths and potential risks. In this video, we'll explore 3 examples that have been performing well: EPR Properties, ARMOUR Residential REIT, and Realty Income Corporation. Now that we've understood what monthly dividend stocks are, let's delve into some examples that have been performing well. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. Our first example is EPR Properties, a real estate investment trust that focuses on entertainment, recreation, and education properties. EPR Properties is a truly unique entity in the world of real estate investment trusts, or REITs as they are commonly known. It has carved out a niche by focusing on properties that bring joy, excitement, and knowledge to people. They bet on the fact that people will always seek out experiences, whether it's enjoying a movie, exploring a water park, or learning in a state-of-the-art educational facility. Now let's dive a little deeper into their portfolio. EPR Properties manages a diverse mix of over 300 entertainment venues, including megaplex theaters, ski resorts, and even golf entertainment complexes. Their recreation portfolio includes family entertainment centers, attractions, and ski areas. And in the educational sector, they manage public charter schools, early education centers, and private schools. This eclectic mix of properties has enabled EPR to maintain a robust and resilient portfolio. But what about performance? Well, over the years, EPR Properties has proven to be a steady performer. Despite the ups and downs of the market, and even in the face of global crises, EPR has shown remarkable resilience. They've continued to generate positive cash flows and have consistently paid out dividends to their shareholders. And speaking of dividends, let's focus on that for a moment. EPR Properties is known for its attractive dividend yield. In fact, it's one of the highest yielding REITs in the market. They have a long history of not just paying dividends, but increasing them over time. This commitment to returning capital to shareholders is one of the reasons why EPR Properties is such an attractive investment for those seeking monthly income. However, it's essential to keep in mind that, like all investments, EPR Properties does come with risks. The company's focus on entertainment and recreation properties means it can be impacted by economic downturns when consumers cut back on discretionary spending. But EPR's diversified portfolio and strong management team have helped it navigate these challenges in the past. Now let's talk about recent news and developments. Despite the challenges posed by the pandemic, EPR Properties has been making moves to strengthen its portfolio. They've been strategically acquiring new properties and investing in their existing ones. One notable example is their recent investment in experiential lodging properties. EPR Properties sees a promising future in this sector as people are increasingly seeking out unique and memorable lodging experiences. They've also been working on strengthening their educational properties portfolio, recognizing the growing demand for high-quality educational facilities. So where does all this leave EPR Properties? Well, it's clear that the company has a unique and diversified portfolio that has proven to be resilient in the face of challenges. They've demonstrated a strong commitment to their shareholders through consistent dividend payments, and they're continuously looking for ways to adapt and grow in a changing market. EPR Properties shows how a well-managed REIT can provide consistent monthly dividends to its shareholders. The company's focus on entertainment, recreation, and education properties has allowed it to carve out a unique niche in the market, and their commitment to returning capital to shareholders through dividends makes them an attractive option for those seeking monthly income. So, if you're looking for a monthly dividend stock with a unique twist, EPR Properties is certainly worth considering. But as always, make sure to do your own research and consider your own financial goals and risk tolerance before making any investment decisions. EPR Properties shows how a well-managed REIT can provide consistent monthly dividends to its shareholders. Next, we have ARMOUR Residential REIT, a company that invests in and manages a leveraged portfolio of residential mortgage-backed securities. ARMOUR Residential REIT, or ARR, is a unique player in the world of real estate investment trusts, or REITs. Unlike companies that own physical properties like apartments or shopping malls, AR's portfolio is made up of residential mortgage-backed securities. These are a type of investment where the income comes from mortgage payments. It's a different approach to real estate investing, and it's one that can offer some significant benefits. Let's dive into ARR's business model. Essentially, the company borrows money at lower short-term interest rates and uses it to buy residential mortgage-backed securities that pay higher long-term rates. The difference between these rates, known as the spread, is where ARR makes its money. This model allows the company to generate a steady stream of income despite the ups and downs of the real estate market. However, this model is also sensitive to changes in interest rates. If short-term rates rise too quickly, the spread can narrow, and ARR's income can take a hit. This is why the company employs active portfolio management and hedging strategies to protect its income stream from interest rate fluctuations. Now, let's talk dividends. AR stands out for its high dividend yield. In fact, it's one of the highest yielding REITs in the market. The company has a history of distributing a significant portion of its income as dividends to shareholders every month. This makes it an attractive option for income-focused investors. However, it's important to note that ARR's dividend is not guaranteed. Like any company, ARR can reduce or eliminate its dividend if its income falls. This happened in the wake of the financial crisis in 2008, when ARR cut its dividend significantly. Since then, the company has been able to gradually increase its dividend again, but this history serves as a reminder of the risks involved with high-yield investments. So, what's the latest with ARR? Well, the company has been navigating the challenges of the COVID-19 pandemic. Like many businesses, ARR has felt the impact of the economic uncertainty caused by the pandemic. However, the company has also benefited from the low interest rate environment, which has allowed it to borrow cheaply and maintain its income stream. In terms of significant changes, ARR recently completed a merger with another REIT, Javelin Mortgage Investment Corp. This merger has allowed ARR to diversify its portfolio and increase its scale, which should help the company maintain its income and dividends going forward. In conclusion, ARR offers a unique approach to real estate investing. Its focus on residential mortgage-backed securities allows it to generate steady income despite the volatility of the real estate market. This income in turn supports a high dividend yield, making ARR an attractive option for income-focused investors. However, like any investment, ARR comes with risks, and it's important to understand these before investing. ARR's approach to mortgage-backed securities allows it to generate steady income and distribute it as monthly dividends. Our final example is Realty Income Corporation, aptly nicknamed the Monthly Dividend Company. Realty Income Corporation, or O as it is listed on the New York Stock Exchange, is an American real estate investment trust that invests in commercial properties. Its business model is based on owning and leasing out properties to commercial tenants, a strategy that has proven highly successful for the company over the many years of its operation. The primary strength of Realty Income Corporation lies in its diverse portfolio of properties. The company owns over 6,000 properties spread across 49 states in the United States and Puerto Rico. These properties are leased out to over 50 different industries, including convenience stores, drugstores, supermarkets, and restaurants, among others. This wide-ranging portfolio provides the company with a reliable stream of rental income, which it then distributes to shareholders as dividends. One of the key features that make Realty Income Corporation stand out among other real estate investment trusts is its dividend yield. The company has a long and proud history of paying dividends to its shareholders. Since it went public in 1994, Realty Income Corporation has not only consistently paid dividends every month, but it has also increased its dividend payout an astonishing 95 times. And if that isn't impressive enough, the company boasts a dividend yield of around 4.5%, which is well above the average yield of many other monthly dividend stocks. In addition to its impressive dividend yield, Realty Income Corporation also has a strong track record of capital appreciation. Over the past 10 years, the company's stock price has increased by over 100%, providing shareholders with substantial capital gains in addition to their monthly dividend income. This combination of steady dividend payments and capital appreciation has made Realty Income Corporation a favorite among income-focused investors. Turning to recent news and developments, Realty Income Corporation has been actively managing its portfolio to navigate the challenges of the current economic environment. The company has been focusing on acquiring properties with tenants that are resistant to economic downturns, such as convenience stores and supermarkets. This strategy has allowed the company to maintain a high occupancy rate of over 98%, even amid the uncertainties of the global pandemic. Moreover, the company recently announced a merger with Verit, another leading real estate investment trust. This merger will create a combined company with an estimated enterprise value of over $80 billion. Making it one of the largest and most diversified real estate investment trusts in the world. This development is expected to provide further stability to Realty Income Corporation's rental income and dividend payments. In conclusion, Realty Income Corporation is a shining example of a monthly dividend stock. Its diverse property portfolio, impressive dividend yield, and strategic business decisions have all contributed to its success as the monthly dividend company. Whether you are an investor looking for a steady source of income or simply interested in diversifying your portfolio, Realty Income Corporation offers an attractive investment opportunity. Realty Income Corporation exemplifies the potential of monthly dividend stocks, providing consistent income for its shareholders. Investing in monthly dividend stocks like EPR, AR, and O can provide a steady income stream and potential for capital appreciation. As we draw to the end of our exploration into monthly dividend stocks, let's take a moment to revisit the key points we've discussed throughout this video. We started with an introduction to monthly dividend stocks, explaining their unique ability to provide consistent, regular income, which can be a great addition to any investment portfolio. We then delved into the specifics of three notable monthly dividend stocks: EPR Properties, ARMOUR Residential REIT, and Realty Income Corporation. Each of these stocks presents its own unique opportunities and challenges, and they serve as excellent examples of the diversity available within the world of monthly dividend stocks. EPR Properties, a leading real estate investment trust, offers an intriguing blend of income generation and potential for capital appreciation. With its focus on entertainment, recreation, and education properties, EPR presents a unique investment proposition in the real estate sector. ARMOUR Residential REIT, on the other hand, is a player in the mortgage-backed securities market. While it comes with a higher degree of risk, the potential returns on investment are also significantly higher, making it a worthwhile consideration for those with a higher risk tolerance. Lastly, we delved into Realty Income Corporation, a retail-focused REIT that has built a reputation for consistent dividend payments, earning it the moniker the Monthly Dividend Company. With a diverse portfolio of tenants and a strong track record of performance, it stands as a compelling choice for investors seeking reliable monthly income. But as always, while these stocks present exciting opportunities, it's crucial to remember the importance of conducting your own thorough research before making any investment decisions. The world of investing is complex and ever-changing, and what works for one investor might not work for another. So take the time to understand your own financial goals, risk tolerance, and investment horizon, and use these as guiding principles in your investment journey. In closing, we hope this video has provided you with a valuable introduction to the world of monthly dividend stocks and, more specifically, The potential opportunities presented by EPR Properties, ARMOUR Residential REIT, and Realty Income Corporation. Our goal is to help you make informed investment decisions, and we're here to provide the insights and information you need to do just that. If you found this video helpful, do subscribe to our channel for more investment insights. Don't forget to like and share this video with others who might find it useful. Remember, knowledge shared is knowledge multiplied.